Imagine you want to invest in gold, but instead of buying and storing it, you buy a share in a fund that owns the gold for you. That's an exchange-traded fund, or ETF. It trades on a stock exchange, making it as easy to buy as Apple or Tesla. ETFs let everyday people invest in assets like gold, oil, or a basket of stocks. No special accounts or technical know-how needed. For years, the crypto world wanted the same simplicity for digital assets. That dream came true in early 2024 with the approval of spot Bitcoin ETFs. This wasn't just a new product, it was Wall Street's stamp of approval for crypto. Major firms like BlackRock and Fidelity launched Bitcoin ETFs, opening the door for billions in institutional and retirement money to flow into Bitcoin. Suddenly, financial advisors could recommend a regulated Bitcoin product, removing a huge barrier for curious but cautious investors. The success of Bitcoin ETFs proved there was massive demand for safe, easy crypto investing. It set the stage for the next big thing, the race for an Ethereum ETF. If regulators approved a Bitcoin ETF, surely other major cryptocurrencies could follow. The market's focus shifted from Bitcoin to Ethereum, signaling a new chapter for crypto's integration into mainstream finance. The Bitcoin ETF launch wasn't the end, it was just the beginning. As soon as Bitcoin ETFs launched, all eyes turned to Ethereum, the backbone of DeFi, NFTs, and more. The question wasn't if, but when, an Ethereum ETF would arrive. Major financial institutions quickly filed applications for Ethereum ETFs, seeing a huge business opportunity. By July 2024, spot Ethereum ETFs were approved, and millions of ETH poured in, cementing crypto's place in traditional portfolios. Now the conversation is bigger. What does Ethereum's approval mean for the rest of the crypto ecosystem? The regulatory path, once unclear, is now a marked trail thanks to Bitcoin and Ethereum. The SEC has established a framework for crypto ETFs, giving asset managers a blueprint for future products. The success of these ETFs signals that regulated crypto investing is here to stay. Ethereum's ETF wasn't just a win for ETH holders, it opened the door for altcoins. The SEC's willingness to consider other digital assets with strong fundamentals has fueled speculation about which coin is next. Now, rumors swirl about a range of coins, from major platforms to meme tokens. The crypto world is waiting to see if institutional acceptance will become a flood. The dominoes are falling and the race is on. The race for crypto ETFs is led by the giants of global finance. BlackRock, Fidelity, VanEck, ARK Invest, and Invesco Galaxy, all major players, have thrown their weight behind both Bitcoin and Ethereum ETFs. Their involvement brings credibility and lobbying power regulators can't ignore. Grayscale, known for its crypto trusts, fought a landmark legal battle to convert its products into ETFs, paving the way for broader approval. The prize? Access to trillions in pension funds, endowments, and retirement accounts that require regulated products. An Ethereum ETF lets these firms offer clients a simple, secure way to invest in the future of the internet. The management fees alone could be worth billions. This isn't just about crypto, it's about capturing a massive new market. Wall Street's biggest names are all in. The path to an Ethereum ETF was far from smooth. The big question, is Ethereum a commodity like Bitcoin or a security like a stock? The answer determines if an ETF is even possible. The SEC kept its stance ambiguous, fueling uncertainty and market anxiety. Some signs pointed to Ethereum being treated as a commodity, like the approval of ETH futures ETFs. Ultimately, the July 2024 approval of spot Ethereum ETFs signaled the SEC was willing to treat ETH like Bitcoin, at least for now. But every new altcoin ETF will face the same debate over its status. The SEC's decisions remain the biggest wildcard for future crypto products. The Ethereum ETF isn't just about ETH, it's about what comes next. Think of crypto as a solar system. Bitcoin is the sun, Ethereum the biggest planet, and altcoins are smaller worlds orbiting them. When big money flows into Ethereum via ETFs, it creates a ripple effect across the ecosystem. Institutional investors buy the ETF, driving up ETH's price. Early holders take profits and rotate capital into smaller projects, especially those built on Ethereum, like Arbitrum, Optimism, Uniswap, and Aave. As Ethereum's value grows, so does the value of its ecosystem. The effect spreads. Profits from ETH flow into other blockchains and altcoins. The narrative shifts from invest in Ethereum to what's the next Ethereum? The ETF acts as a catalyst, igniting a broader altcoin rally. Capital moves further out on the risk curve, spotlighting innovative projects. The approval of an ETH ETF sparks a chain reaction across crypto. With Ethereum's ETF live, speculation exploded over which altcoin would be next. Solana, known for speed and low fees, quickly became a top contender, with ETF applications already filed. XRP, after a partial legal win in 2023, regained hope for an ETF despite ongoing SEC battles. Its utility in cross-border payments and a large community make it a strong candidate. The wildcard? Dogecoin. Once a joke, now a top 10 coin, Doge has ETF applications from firms like Grayscale and Bitwise. Its case, a long history, high liquidity, and massive following. Approval of ETFs for Solana, XRP, or Dogecoin would be a watershed moment, signaling regulators are open to more than just Bitcoin and Ethereum. Each approval could trigger a price rally and make it easier for other altcoins to follow. The stage is set for a new era of mainstream crypto investing. The ETF race is just heating up. The biggest impact of crypto ETFs? A tidal wave of new money. ETFs connect traditional finance, pension funds, hedge funds, corporate treasuries, to crypto. These investors can only buy regulated products, and ETFs are the key. This influx brings stability and liquidity, reducing the wild volatility that's long defined crypto. As institutions build long-term positions, price swings become less extreme. But it's not just about money, it's about legitimacy. An SEC-approved ETF managed by BlackRock or Fidelity is a powerful endorsement. It changes the narrative. Crypto is no longer a fringe gamble, but a real asset class. This legitimacy attracts more investors, developers, and businesses, fueling a virtuous cycle. For Ethereum and other altcoins, it means more real-world use and adoption. ETFs are more than financial products, they're cultural validation. Optimism is high, but ETF approval isn't guaranteed. The SEC can reject or delay applications, and a denial for a major altcoin could shock the market. Prices could plummet as speculative money flees, and negative sentiment could spread to other coins. Even delays create uncertainty, leading to volatility and investor fatigue. Sometimes the hype is so great that even an approval leads to a sell the news drop if expectations aren't met. If ETF inflows disappoint, prices can fall as early investors cash out. The road to mainstream crypto investing is still full of twists and turns. Caution is essential. So, how should you navigate the ETF frenzy as a beginner? Stay informed. Follow official news and reputable analysts, but don't get lost in social media hype. Practice risk management. Never invest more than you can afford to lose, and consider dollar-cost averaging to smooth out volatility. Diversify. Don't bet everything on one coin or one ETF rumor. Know the difference between trading short-term hype and investing for the long haul. Focus on projects you believe in, not just ETF speculation. Be patient. Crypto's integration into traditional finance is a marathon, not a sprint. There will be breakthroughs and setbacks, but the story is just beginning. By staying informed, managing risk, and thinking long-term, you can navigate the hype and seize the opportunity. The future of crypto ETFs and the altcoin market is still being written.